Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc.
LME 3-month nickel. Another week of not really much to report. This is despite the outside week made 2 weeks ago and also the almost dead cross as well. However, I've noted how on a closing basis we are seeing the build-up since mid-May of a congestion area around 21,000. Now going to the big picture, the slowing upon approach in late March towards the February 2014 high at 22,155 and the associated congestion seen throughout the middle and latter part of 2022 at that and nearby levels, well, that sparked a small recovery. Now, this was limited in mid-March by, in part, the August 2011 high at 25,195, but also in part by the overhead declining medium moving average, currently 24,295. These reactionary moves back up in March and then peaking in late April set up the market for the latest move lower, for new bearish Andrews pitchfork pattern, highlighted in red on my daily chart. This pitchfork saw a small breach of the upper time at the start, and that's currently at 22,890, but this was quickly repaired and the market has since been congregating around the middle time, currently at 22,255. So overall, this bearish pitchfork continues to show the current bearish angle of attack, and as a consequence, I would keep a close eye on the tines as they head lower. That is the upper, the middle, and also the lower time, currently at 17,625. The thing to watch out for below is a little distant, and that is a congestion seen between 17,815 and 18,850, consisting of the August 2019 high at 18,850, the June 2021 high down at 18,110, the important July 22 low down at 18,230, and the October 2019 high at 17,815. LME 3-month zinc. The market has seen a small reactionary move higher this past week, but overall it still likes the recent constructed bear channel, highlighted in dark blue on my daily chart, currently 2472 to 2050. Now going back a bit, the key recent event here was back in late April when prices broke down through the middle time, currently at 2609, of the late May to mid-August 2022 bearish shift pitchfork. This is the one highlighted in purple on my daily chart. At the same time, we saw the establishment of the 2023 downtrend, currently at 2472, highlighted in dark blue on my daily chart. This is still a valid downtrend. It led to the construction of the previously mentioned bear channel. Thus, the picture is clearing up, with the market moving in part down within the dark blue April to date bear channel, which in turn is also moving down within the purple May to August 22 bearish shift pitchfork. To add to this, I have over many weeks spoken a lot about the March 2020 to June 2022 expanding wedge pattern. This is way up off the top of my daily chart. I've given in the past some outlandish potential targets for such a long dated and wide pattern. The primary outlandish target for such a pattern was in the 2545 zone. This was achieved 3 weeks ago. I last week laid out the potential secondary target X1. This was a far harder to reach target. It would be quite a way lower, down in the 1345 zone. This is one definitely to put in the back of your diary and only look at occasionally. In the meantime, a more immediate support below has been the October 2020 low at 2282. Which has been breached, but there is an argument that it barely had a second consecutive close below it. We therefore might consider it breached rather than broken. This ties in with the penetration and breach 3 weeks ago of the lower bear channel line. It wasn't enough then to verify it, and prices pulled away higher, much as they did last week. The question I asked last week, and one that is still open, is whether this was just a tickle of the lower bear channel line and the October 2020 low, or the first of perhaps a number of attempts to break it and resume the decline. At the moment, it does not look so, and I may retire this question after today. As you see, prices have risen enough to test the mild overhead congestion at 2397. In breaching it even, but not breaking it yet. Above this congestion, next resistance is the upper bear channel line come downtrend. Meanwhile, below the October 2020 low, we have some congestion dating from July 2020 between 2186 and 2156. But nothing of note below these until the lower bull channel line and the lower time in purple.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.